Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, July 28th, 2008. Well, as we get into today's video, folks, we're going to look at some key indicators from today's action in the markets. Now, across the board, InTheMoneyStocks.com has been dead on since 2 days ago when we saw the first pullback in this market off that move up. And we actually had called that in the previous day's video. I believe in last Wednesday's video, we called the Thursday pullback to the day, telling that major indicators all were flashing red for a pullback. And sure enough, it came to fruition the following day. What we saw Friday was a little bit of a bounce pause day in the markets. And then what did we see today? Well, we saw another down day of significant proportions as the market continues to pull back off that massive run from last week to 2 weeks ago. Now, this is normal, folks, and I want to stress that, is that we're not talking about a possibility of new lows yet. Now, whether or not that changes over the next few weeks or days, that's up in the air. But right now, we have to look at this as a pullback on light volume, and that's the key, and I really want to stress that today. The volume in the market was minute compared to what we were doing on the rally side. And I'm going to show you guys that in the charts and so forth, but I want to point that out. Yes, it was a significant down day. You saw the Dow down 240 points, the NASDAQ down 46 points, and the S&P was down 23, and percentage-wise, that's basically 2% across the board, and a very significant percentage drop any way you cut it. But the important thing is here now to look at is that, okay, well, we had a massive run. We knew InTheMoneyStocks.com was dead on again by the pullback, obviously, as we pulled back and are continuing to pull back. But the question is, how far do we pull back? At what level is it a safe area to start to re-enter? And why do we think that there may be another push up in the not-too-distant future? Now, personally, in the money stock, still feels like there's going to be some more pauses or small pullbacks here, but we're starting to get into that range, and I'm going to show you the charts where we start to begin to get, start to pay attention to the charts. I would put it that way. We're not at the point by any stretch where we're yet buying, but we are beginning to pay attention. So let's take a look at the charts about what happened today, and as we all know, a relatively large down day, but the volume again was pretty light. Now, you see right here early in the day, the markets are generally flattish to slightly positive, especially right on the open. You got a little bit of a tick up. The NASDAQ went positive, the S&P and the futures and the Dow were all positive, just barely. And then really right around the 10 o'clock reversal hour, everything just started to fall. And the volume was, again, not very heavy across the board at all today, which is a very unique thing that we need to pay attention to. It's a good indicator. But notice the fall. I mean, there's not much to talk about other than this move. Once you got below the moving averages, you have the 3 moving averages here, the 20 moving average, the 50 moving average, and the 200 moving average. Once you got below them, you never really got back above them all day. And you can see the 20 moving average worked as a beautiful cap all day. We touched it twice in the afternoon, right here and right here, and you never could get through that point. So it just signals there that the weakness in the market was significant today. And really, what led the downside? Well, it was a lot of financials. Now, the financials had the biggest run up. I mean, we saw some of these financials rallying 100%, close to 100% in days. Just like the airlines last week on the oil fall rallied 100% plus in a couple days. They have to pull back. All right, you can't see a market run up like that in a sector or anything and not see a significant pullback, especially when it's been such a weak sector. It's short covering is driving that. People are buying it at the lows. That's driving it. Eventually, that drives. It kind of dries up, and you start to see reality set back in. So you can see the XLF here, and I want to bring up the XLF on the daily. And remember, we talked about this hitting the 50 moving average, and those of you that can't see it on the black background, I'll draw it in beautifully here. There's the 50 moving average. Notice how you rally, and look at the size of this rally on the XLF. And again, the XLF is the financial ETF, and you rallied all the way basically from $16 all the way up here to around $23. And in doing so, you pierced the 50 moving average. Now, any normal trader that trades based on technical analysis is selling right here, as we would have done the same. I mean, you just had an extension move of unbelievable proportions. Now the question was, well, where were we going to pull it back? And once we called the top here on the general index, and we'll go show you that again, is the question was, well, it's got to pull back to the 20 moving average, which is what it did today finally. So now you're beginning to find some areas of medium support. Now, is it a true pullback? Well, you got to see this thing at least touch this level, I think, personally. You want to see a 50% retracement of the move, which is right around here, given right between the 50 and the 20, and then we can start talking about, well, is it this 0.618 Fibonacci retracement that we want to look for, or do you want to take a stab at the 50% retracement off this move and a pierce of the 20 moving average? At what point do we take a stab at it? And that's going to really be where we're setting up now in this video, because it's beginning to come off the highs. You're beginning to get a little pessimism out in the market again, a little bit of that psychology of a little scared techniques again, which is a great indicator as we always talk about. So let's go back to the SPY and just gauge the daily market. All right. Now again, we talked about the market here, and we had basically called for a drop. We called it a little bit higher. We were right here. It went a little bit lower, and then you saw that rally right back. And once you got above this line again, that's when you really take off to the upside. All right. Now the key here was, what did we see on this day right here that was telling us that it was going to reverse the following day? Because this is where we called it on this Wednesday video for a Thursday decline of massive proportions. And we said in the video there's some major indicators out there that are calling for a drop. Well, not only is it a beautiful little tail on the top of that and a major extension move that warrants mad caution or extreme caution, but we had our proprietary analysis, our calculations. Nick, my partner, was going through massive calculations here, and they're all coming up with major sell signals. All right, so again, you can come to the webinar. We had the webinar last Saturday, guys. By the way, fantastic group involved in the webinar. We may be doing one again this Saturday for those of you that missed it, because again, as I mentioned, the switch over to the new website is coming up shortly, which is going to change things around a little. So email us if you're interested in getting in on this follow-up. We had a few extra people that we couldn't quite do that day, so we're going to try to do another one this Saturday. So email us at support@inthemoneystocks.com if you want to get in on it, and we'll try to post another link to sign up to it. But I definitely encourage it, because those people now have a leg up on everyone else. And the leg, I mean, those of you that took the webinar, just count the bars right here, and you'll know what I'm talking about. There's a little inkling there to what I'm talking about. So in any case, long story short, beautiful pullback here on Thursday. You had a pause day Friday at the 20 moving average, and then a continued downside today. Now we're beginning to get into that area where we start to look at the charts even a little more closely to see where exactly we're going, because you've retraced. I have to do this calculation, but it looks approximately 50% to 0.618, and there's a couple other indicators I want to show. Number one, look at the light volume on this drop. All right, here's the drop starting right here, and you had a very, very steep drop. Look at that line I'm drawing. Look at the volume here, some of the lightest volume. All right, that's in opposed to the volume back here. Look at how heavy this volume was. So again, the pullbacks on lighter volume, that's something you definitely want to see out there, because it's telling you that there's not a lot of people selling. People are unloading, but there's not any buyers. There's not really any sellers. It's kind of that summer doldrums again that normally we see over the summer, but this summer we really haven't seen, frankly. This summer's been a wild summer, wilder than most of you out there have probably ever seen. Even myself, it's been one of the wilder summers that I've even traded through. But nonetheless, the fact that the light volume is coming in here is a bullish sign on a pullback. And again, we do anticipate at some point there may be a push up in this market back in at least to this high, possibly up to this point right here. All right. After that, then it's all the bets are off, and we'll reanalyze the market. But again, we're not calling for it quite yet. We still want to see one or two more pause to slight pullback days in this market. Maybe down to this line here. We calculated this in. This is going to be very good, significant support on the SPY, which is right around that 122 mark. All right, you get right in that area. Now I'm getting very, very interested, okay? And the next area, if that's broken, would be a double bottom on the SPY, and that would be where we're getting very, very interested in taking a stab at the market for another rally up. So keep that in mind, guys. All right, and again, I showed you the XLF. What a beautiful pullback this was on this chart here, as you basically pierced the 50 moving average here, pulled back or on the daily back to the 20 moving average. I do think it has a shot at going a little lower. Merrill Lynch today just got smoked. Here's Merrill Lynch. Look at this move on Merrill Lynch. Talk about a possible W formation at a double bottom. All right, now, am I stepping up? No, no, no. Let that play out a little more, because it's a high-risk play. But, you know, would I consider buying calls on it? Maybe. Maybe that'd be the way to play it. At least you're not risking quite as much. But nonetheless, it basically went from here, which is basically $24, $23, all the way up to the 50 moving average, which is right here. And that's at approximately $36. And then 3 days later, it's back to $24. Unbelievable, guys, on this Merrill Lynch chart. And again, the financials did get hit today. And SKF was one of our best calls from last week. For those of you that have been watching these videos, we talked about the XLF and the SKF, which is 2 times long the financials. Excuse me, 2 times short. That's the big difference there. 2 times short the financials. And right here, folks, It hit the 200 moving average, and look at that rally up off of that, basically from $111 all the way to $144 today, and this is now getting extended. So yeah, maybe it goes to this 20 moving average up here, which is right around 153. It may see that, but again, you want to be very careful now as that trade is pretty much done. The one other thing I want to show you is the UNG. The UNG to me is a big possible bounce chart in here, and it's an ugly chart by how hard it sold off, but it's the natural gas ETF, and it wouldn't shock me to see this get to bounce soon. It might have a little more downside. The one thing I do want to point out to you guys is take a look at this pattern right here. You have a small finger, big finger, small finger. And those of you that, if you put your hand like that, I'm not sure if that's telling us to keep out of this trade or not. But it is something to watch there. You guys get the point, I'm sure, if you were to put your hand like that and see what it's telling us. In any case, folks, just a little inside joke there to lighten the mood on this day where we pulled back strong in the markets. So again, just to go over before this video ends, we're looking for a couple more consolidation small pullback days or one more pullback day here or there, and then we're going to start to analyze the possibility of an upside move. So be ready for that, guys. Again, hang on. The market is not going to go away from the volatility. Have a wonderful day, and we shall talk to you tomorrow.